AG, so I wanted to share this with you on the weekly profile. Now you said maybe it looked a little bit tricky, so I'll do ES and then NQ real quick. So starting off the week with, because of the bond auction, starting off the week on the Wednesday. So we get this Monday low, we get this Tuesday consolidation, and when Wednesday kicks off bullish, that eliminates the Tuesday low. So we know we have only a few more profiles left to go. So just kick this into replay mode, talk through the Tuesday, talk through the Wednesday. So the idea is using the bond auction protocol, which is 11 to 12. Start off with the Asian range consolidation. We see a London normal protraction happening at 2, big run up. This is the high of Tuesday. Could have been a short if this low was rejected. There was a lot of liquidity that got built up here, but waiting for that um, bond auction lunch, right? So another good reason to wait for the lunch to kick off. So we get the New York session opens up at 9:30. We see a massive run above. You can see the respect of that previous day's high getting rejected. We see it come back below, and then we kick off into the bond auction protocol. So on the 5-minute time frame, these lighter green candles is where you would see breakers. So the pattern I like to use the most is a breaker. So you see an intermediate low, low gets taken, and then consecutive green runs breaking structural, coming back to that level with that swing low, the highest up close candle in that swing low. Price will mitigate there. Same thing happens here. You have this intermediary low, then price breaks that low, comes back up. Sorry. The highest candle in that leg that had the sweep, that's the one you enter after price breaks that market structural, and then price continued higher. So on the 1 minute, again, waiting for that 11 to 12 o'clock hour to start kicking things off. You can see the same thing happens here. We drop below the low, we take an AM liquidity 1. AM liquidity is just taken on this one as well. You can see the double lows that get created, but the main thing is that market structure shift. We come back to the highest up close candle in that intermediary low that got taken and then broken. Enter at that point. Second one would be right after, again on the 1 minute time frame. So after that bond auction protocol basically confirms bullish, meaning the high and the low between 11 and 12, price is making new structure to the upside. Then you're just waiting for a low, let that low get taken, market structure shift, re-enter on the highest candle in that up close, and then you're off to the races. So that was Tuesday. That was Wednesday. And then the next one would be Thursday. So let's take Thursday. And so now do the same thing. Oh, well, the chart, previous day's high and low. I've shown you this one before. So you basically are setting Wednesday's high and low after that run. And then on Thursday, you're looking to make that trade. So I'll go down to the 5-minute time frame. And then on Thursday, what we see is price punches above Wednesday's high, the dotted line. That's the CPI. Then it starts to shift lower. What we're going to be doing is looking at this leg for an entry here. And what that leg will do is set a fair value gap. We're waiting for the opening price. Once a fair value gap gets filled, we're waiting to see after the opening of New York, we see that structural push down. Go down to the 1 minute and I'll show you what I mean, but we're looking at that tag right there on the previous day's high. So on the 1 minute time frame, this is what that looks like. So you can see that run up. What we've left here is a fair value gap. So just to break this down, so that fair value gap, it gets touched, it gets broken. That fair value gap will leave in its wake an order block. So that becomes a high probability order block if people are looking at this to go continue bullish. But with that price break below the previous day's high, then that order block actually becomes an inversion. And so that would be another way that you could get into this trade on the anticipation of a midweek consolidation. Consolidation means it's got to come back and break some previous day's low. If you waited for the bond auction on this day, which was 11 to 12, it was there, but it was just a little bit less. I want to say easy to trade, maybe. So same intent. You see the price run down. So consolidation is here. So the price run down. You can look at this as your optimal trade entry, and look at tips like seeing relative equal highs and then a price structure break lower. So you've got your optimal trade entry here. So that's the high to the low. Optimal trade entry tags in right at the 70.5. And then you're looking to get to the previous day's low. So that's this candle here at 105. So your whole day is done. The full previous day's range from high to low is done before 1 o'clock. And whenever that happens, you're just expecting consolidation. So that would be Thursday. There is one more setup here. So after price uh, makes the bond auction 11 to 12 range, that price action range, you look at any relative equal highs for price to then break or touch back. So that would be a secondary entry again, with the target being the previous day's low. Last one is on Friday. So same intent. Let me pause this and just clean this up. Okay, so the last trade setup here is going to be on Friday. So again, using the previous day's high and low, we framed it as a Monday low, which is going to have one direction, right? Your strongest plays are going to be bullish, but it doesn't mean that you're not going to have anything that's going to obviously retrace. We come down, we take Wednesday's low. We have Tuesday's low that's still in contention, but we should not see Monday's low get broken. If Monday's low gets broken, it's a different profile, which we'll talk about on NQ. So PPI takes out Tuesday's low, rejects off of the new week gap, stays or maintains a Monday low profile. 5-minute time frame, we can see we get the New York open at 9:30, and the 9:30 starts to make the cleanest structure. So in this whole price action, you do have a breaker, which is going to be here, here. So once this breaker gets tagged, that's a very large stop, right? So here's that swing low. You can either take that high, but you also have this intermediary low. So intermediary low, that spike down gets taken. The highest one here is your breaker. That breaker gets tagged. Then you'll have to zoom in to look at the next price action structure, which is effectively this intermediary low that also gets taken once that price action shifts bullish with that spike above, or if you wait for a candle close, which then takes a new high, which is after 9:30, 9:35, then you're looking to get in on the breakout, and the low down here is what you want to see stay defended. So that would be one. The next thing you could do is you just wait. You can see at this point here, we come back up to the midpoint of the previous day. So that rejection, so it wick break, that's going to set your tone for the lunch. So this is a normal lunch day. There's nothing fancy about this one. So you're looking at 12 o'clock to 1 o'clock. And there is liquidity that gets created in and through lunch, which can help frame the day. And what we're using here is we're looking for liquidity or any sort of leg in the AM session to get used. So in this case, it would be the fair value gap. That fair value gap then starts to break structure on the 1-minute time frame. We'll take a look at that in a second. But effectively, these fair value gaps, once they get respected, then we're looking for them to become inverted. So it's like an OG fair value gap. Where is it going to stop? Where is it going to stop? Where is it going to stop? It stops on this one. We wait for price to break above that fair value gap. And now this fair value gap is fair game one more time. On a 1-minute time frame, you're using the same methodology. So you can see here, we have some form of structural break on the 5-minute. We have this intermediary low. We have price breaking structure above. So you can use this one or this one because you've got two lows. You got this low here and you got this low here. So it's like a nested breaker. You'd have to put your stop below this low. So that breaker, which gets tagged not even barely there. And this breakout, highest up close candle from this structure, when price then breaks up, you can see respect, 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 and then it goes up. And where is it going? It's going to the previous day's high. So once it respects that previous day's high, you would use the same methodology to then say, okay, well, now we're doing the opposite, right? We have structure break, tag back into a fair value gap, and then you'd go down. And where is it going down to? Right around the 50%, and then it just kind of consolidates around the 50%. On NQ, and I hope this isn't too long because I know sometimes it's hard to stay focused when these are so long. But on NQ, it's basically the same thing. You're using Wednesday. Wednesday breaks the previous day's high. You've got the same intention, sweep a low, consecutive runs up, breakout, tag, go to the previous day's high. Once that's tagged, same intention on the Thursday. So Thursday, this one looks a lot cleaner. So we break Wednesday's high, which is this one here. So the first wick here, this is Wednesday's high. Then we get PPI, CPI in this case, excuse me, runs higher, breaks below, tags on the previous day's high. So once you get that new spike is done, let that always play out. Tags above right at 9:15. So that's an early entry, but then it sets the tone. So this order block from this push up on CPI, where people first thought it was respecting it, the minute it breaks, once it breaks with a candle close, and it's even at two candle closes, then you go on the opposite side. Enter here, stop above here, or even stop above here to be safe, and then you're targeting the previous day's low. So previous day's low in this case actually gets hit and then obliterated. So you can see that it gets hit, closes above, and then a few wicks spiking below, and then gets completely obliterated. On the hourly chart, what that looks like is this. So whereas Wednesday ran up and then Thursday just went to Tuesday's low on ES, this is now NQ. NQ completely shifted all the way through. It closed below Monday's low. So in this case, you're only looking for price to come back to about the midpoint of the previous day's high, of the previous day's range, excuse me. So this is Thursday's range now. We sweep the low, but we're only going as high as the midpoint. That midpoint also lines up with a breaker, a bearish breaker to the downside, and that's where we see that shift. The other thing you have apart from the breaker is obviously staring right at us is this big SIBI, and that SIBI, when you split it, gives you the perfect touch on the 50% to then just push back into the range. So those are the setups. I hope that helps with the weekly profile because you mentioned your it looked a little bit tricky, so I thought I'd just share that with you.